Hi folks, and welcome to the Facts and Logic Show. Today's show is about mortgage rates. If you're like most people, you've probably been enjoying these historically low interest rates. For all intents and purposes, money has practically been free, and it's been what has helped propel our economy over the last 10 years. However, that might be all coming to a sudden halt. See, buried in this weekend's paper was an interesting article about Janet Yellen. For those of you who don't know who she is our new Secretary of the Treasury. Since 1996, with the exception of the last few years under President Trump, Ms. Yellen has served as Secretary of Treasury, a member of the Federal Reserve, and then Chair of the Federal Reserve. She has served on the White House Council of Economic Advisors, and she also happens to be incredibly smart and a former head of the Federal Reserve. So she's one savvy, smart woman. And that is actually why I'm concerned. When a woman who knows how our economy runs and knows just which levers control what, when a woman with that kind of knowledge starts tweaking those levers, it's time to take notice. Because change is in the air. In a small article, buried on page 5 of this weekend's paper, was a little article titled, "Yellen Puts New Focus on Climate Risk," which is an interesting thing for the Secretary of the Treasury, essentially the country's chief accountant. Now, the Treasury oversees a lot of the plumbing of our country's economy. They are the ones that auction government bonds, they're the ones who run the IRS, and a lot of related agencies. Now, what was interesting about this article was, and I quote, "Among the climate risks that Ms. Yellen and others see for the financial system are more frequent severe weather events such as flooding or wildfires." Sounds reasonable so far. For example, mortgages in coastal areas are vulnerable to hurricanes and sea level rises. Okay, banks' business may also be altered as countries reduce their reliance on fossil fuels, including more widespread use of electric vehicles, Ms. Yellen says. If the Treasury passes regulation that requires banks to reduce their exposure to flooding and extreme weather events, or fossil fuels, i.e. coal, shale, oil, and related activities, that will have the end result of, number one, shifting bank loans to eco-friendly sectors and non-coastal areas, and number two, driving growth in those sectors while simultaneously driving down the value in fossil fuels and quote-unquote risky sectors. Now, all of this is conjecture. It could also very well be that Janet Yellen is saying this so that the market drives those changes without her or Biden having to make any policy changes. It is certainly a lot cheaper than giving out billions in tax incentives. On the other hand, it could also be her way of giving the Federal Reserve some more ammunition to use when the other shoe finally drops in our current COVID crisis. See, prior to COVID, headlines were running like this one. Central banks short on ammo, forced to rely on governments. This was Bloomberg, which actually just ran this past November. Or this one, the death of the central bank myth. For decades, monetary policy has been treated as technical, not political. The pandemic has ended that illusion forever. Which is a really, really scary thought. Because the Federal Reserve and the central banks in general are looked upon as the ultimate saviors of the economy and the global markets. Around the world, people view the United States Federal Reserve as the gold standard, the one whom will save everyone else. And the main currency that the central banks trade in is faith. Faith that they are independent, unbiased economists who will regulate the monetary policies for their respective currencies without emotion or political inclination. They can be counted on to be the most ethical of everyone because the economic well-being of everyone who uses their currency depends on them. And we need that faith and their ability to regulate and manipulate the flow of money to save us from economic crises so that we don't have another Great Depression. But if nobody believes that the central banks can do their job, then they won't be able to affect the economic outcomes. Which is why, regardless of what happens, the fact that the Treasury is exerting monetary pressure in a method that is definitely political, but similar to the mechanisms used by the Fed, is extremely concerning. Now, as an investor, as retirees, what does this mean? In the short run, absolutely nothing, right? This is a wait and see. We have to wait and see what actually happens. Will this get implemented? What kind of effect will this have when it is implemented? What other measures will get implemented as well alongside these policies? Now, in the long run, this sends a very clear message that the Biden administration is going to use every tool at their disposal to promote their political and economic agenda. Which means clean energy will probably get a boost. And the cost for producing fossil fuels in the US will increase, either due to regulation, increased loan costs, taxes, etc. So there will definitely be winners and losers in this space. I would also expect increased expenses for real estate development in coastal/climate change areas. Places like New Orleans, California, parts of Florida, they're probably going to see an increase in expenses. How those expenses will take effect and who will be impacted is yet to be determined. However, change is definitely coming. Personally, I'm going to recommend to my clients to start shifting out of non-diversified real estate holdings, move out of fossil fuels as opportunities present themselves, and look for buying opportunities in companies that can capitalize on the current administration's green agenda. I think it's too early to tell who the winners and losers will be, but it's definitely a direction that we want to look at. As always, what matters at the end of the day is that you have a sound retirement plan, one that is designed to provide you with confidence and peace of mind in retirement, one that is designed to be defensive during times of volatility and opportunistic during times of growth. As always, stay safe. And if you have any questions, email them to me at Leibel@yieldsforyou.com. Thank you and have a great day.